G'day, Bico Konstantinos here, and today we're going to be talking about whether gold is forming a massive multi-year cup and saucer pattern and what that actually means. Delicious! Please like this video and consider subscribing because that would help myself and Bruce out a great deal. So what does this cup and saucer have to do with the gold price and the potential for an upwards continuation? Well, let's have a look into the charts.
The cup and saucer pattern was originally defined by William O'Neill in his classic book, How to Make Money in Stocks. Before we start talking about the cup and saucer chart pattern, I want to just discuss why technical price patterns even matter. Now, when you look at the price action of any instrument or asset, that price action involves all participants in the market. So when you look at previous action, it reflects people who think that asset's going to go up, people who think it's going to go down. It reflects the level of their beliefs, how strongly they believe that. It affects all their emotions. So for example, when you see a price chart, it can include all the emotions that go through any investor or any investments in regards to, greed, fear, and all those primary emotions that all market participants have. Now, when you do look at price action over multiple assets, classes, and different instruments, you can start to see consistent patterns. And when you combine several indicators together and it forms a pattern, it can give you some sort of clue in regards to future price action or future price direction. Now, in regards to technical patterns, they can't predict the future. They're never 100% going to work out the way that the pattern suggests. However, if used with a combination of factors, so for example, big picture, looking at the total environment of the markets and the asset that you're looking at, they can certainly give you an edge in your trading. So let's look at the cup and saucer technical pattern. So the way this pattern forms is you've got a price chart that goes up to a certain point. So this is a new high in whatever that price, that asset reaches. And from that high, we see a retracement. So this retracement here is curved. So we don't want to see like a V straight down and up. We want to see a curve, and this actual curve forms what we call the cup. And so what happens is the cup curves upwards again, and it rallies back towards that previous high. So once it reaches that previous high, there is some resistance. And so that forms the price downwards. But this retracement downwards is quite shallow. So it definitely doesn't retrace all the way back down to the bottom of the cup. If it did, we would not class this as a cup and saucer pattern. But this retracement here is what we call the handle. So if you look at it, that's the cup, there's the handle, and that's why it's called a cup and saucer pattern, because it resembles a cup of tea with a handle. But after this small retracement, the price then rallies. So it then rallies back to this previous high that's been hit twice, but instead of finding resistance, it surges through to a new high. What can give us confidence in a cup and saucer pattern? Well, this first point here is we want the pattern to occur over a longer period. So we don't want to see this cup formed over several weeks and then the handle over a short period. We want it to be at least several months in forming and even potentially over years, because the longer the setup for this price pattern, the stronger the potential bullish move. So we're looking at a longer period. Now, when we look at the retracement, so the retracement typically is less than half the size of the cup. So what that means is from the top of the cup down to the bottom, we don't really want it to go more than half that, that amount in regards to this retracement. So we want to see a shallow retracement. Hopefully this retracement is on lower volume as well, and that indicates that the selling off this high resistance point isn't significant, isn't substantial enough to take the price all the way back down to the bottom of the cup. And so after this handle, so after this shallow retracement on lower volume, we start to see the price rally towards the high again. And so we probably hope to see a bit of an increase in volume. But when it gets to this resistance level, because it's been hit once in the first instance and the second time, there's a lot of interest around this level. And that's what makes this chart pattern so significant, because it's occurred over a long period. All people, all participants in this market that follow it closely will know these high levels. So they'll know that it's reached a high, it's tested a high again. So they'll be watching so closely at this point whether the price can rally through that level or if it will retrace back downwards again. So what we're actually looking to confirm is a rally through on higher volume. So we'll need to see the price above above the high consistently. So we don't want to see a false breakout which jumps up and then comes down. We want to see rally above and then stay above this level and push up higher from there. Price target for a cup and saucer pattern. So looking at the most bullish scenario, so when we described in the last section regarding a long period to form the cup and the handle, rising volume, especially on the breakout. So in the most bullish scenario, we can measure from the bottom of the cup through to the top of the cup, and we will project that price upwards to give us our bullish price target. Now let's have a look at the gold price. I've put the weekly chart here of the US dollar gold price, and it starts basically from 2010. And as you can see, the price rose quickly to a high just below 2,000 US dollars. And since then, it retraced over a number of years, hit a low around about 2016, traded pretty flat up and down, and then recently, only recently since about 2018, 2019, it's risen very strongly again. It's reached a new high that was slightly above the first one, and it's retraced downwards. So what we're going to do is we're going to plot a curve on the weekly gold chart. And as you can see, the price action really fits nicely within this curve. So what we mean by that is the price has hit the curve line, it's retraced, gone flat, it's hit it again, and it's hit it again here, hit it again here, and it's actually aligned extremely close to this curved cup, as we call it. So once we've formed our cup in the gold price, we want to paint the top of the cup or draw the top of the cup. And for this, we're going to do it at the level of 2,000 US dollars. And that's a significant level. It's slightly above the first high, but it's such a significant level in investors' minds regarding the US dollar gold price that it probably makes the most sensible level to put the top of our cup. And then we're going to look at the handle of the cup. So as you can see, since hitting that high, the price of gold has retraced downwards, but so far it's only been a shallow retracement. So it's only gone to just under 1700 US, which is not half of the candle at all. So it's only quite shallow in regards to this whole multi-year pattern. And so from here, the price has risen up from this latest low under 1700. So the price is basically testing this downtrend line at the moment. So from here, the potential is if gold price continues to rise towards this previous resistance level of 2000, then it creates a very strong possibility that the cup and saucer pattern will be confirmed. And if confirmed with the other indicators, like we said, in regards to increasing volume, a surge beyond this resistance level, so a surge beyond 2000 on increasing volume, then the prospects are very bullish going forward for the gold price. So gold price potential price target. So I've used the monthly chart of gold here, and it's basically showing the cup that I went through prior. It's showing this handle at the moment. But what we can do is, in a very, very bullish scenario, we would measure the bottom of the cup through to the top. So in this case, we're measuring above 1,000 US dollars through to that 2,000 level. And we would use that measurement to measure our price potential prediction or our price potential target. Now, you would only use the entire cup height in very bullish scenarios. So if this cup and saucer pattern does eventuate, if there's very strong volume and very strong surge through that previous resistance level of 2000, then potentially you could have a price target all the way through till just under 3,000 US dollars.
Thanks for watching my video, and may all the trades be in your favor.